For staying with us, this is the AM show, and today more savings and loans companies say they have reduced the lending to public sector workers as part of measures to curb the growing problem of non-performing loans. According to the Chief Executive Officer of Opportunity International Savings and Loans Company, Ernest Yereku, the decision follows increased repayment challenges within the public sector, which have affected the financial status of some institutions. He's been speaking to Joy Business, James Ishan.
Three basic activities that you should do. How do you underwrite your loans? Is there one man who makes decisions on loans? For us, no. There are clear processes that you must go through before a loan is approved and disbursed to a customer. How about monitoring? I encourage institutions to enhance their monitoring regime, because once you give out a loan, you need to monitor the client so that the loan is not misapplied. You know, these are very basic tenets in delivering credit. We have gone ahead as of last year in October to introduce a loan origination tool. And this is a tool that enables us to onboard a customer, to start a credit process, to underscore, credit score the loan, and then we can make decisions on that loan in addition to what the system, the AI-backed system, will do. Why are we investing in this when we have an existing credit, risk management process? Is to standardize the credit appraisal system so that we do not have our NPLs moving up and down. But that once we standardize the process, we are likely to see a standard trend of how decisions are made and whether or not our loans will be repaid, and so forth. So I believe that the credit underwriting process is important. I believe that monitoring and supervision is important. We are a microfinance-focused institution, and we live with our customers. We do not just give loans, we train our customers. We do not just give any training, digital financial services. We are doing financial literacy trainings. We are introducing all kinds of things. When I say the customer as a whole, not just credit and training, but we are looking at the customer in entirety. If you are doing this to your customer, it means you are close to the customer and you understand the customer. That way, the customer has loyalty with you and the customer will repay your loans. So this is the next stage that we are moving to, using technology backed with our customer-centric approach to be within the communities across the country.
Customer-centric approach. Now, there were issues of public sector workers, to be precise, teachers, nurses, and all of that. I mean, that was some 2 years back. And your association itself raised a lot of concerns that they come for loans and they abscond to other parts of the world. What is that situation like as we speak?
I think from the policy point of view, there's been some improvements between the institutions and the Controller and Accountant General. I think that earlier we had some backlog of payments, and this was a key concern for actors within this industry, to say that some deductions are made, but institutions do not receive the loan deductions on time. That was one of the key issues. The second issue was the exodus of some professions outside of this country. Like I said, it is about your purpose. Why were you set up? For us, strategically, we have a very minimal percentage of our portfolio in that area because our mission is clear, who we should serve. We are not saying that public sector workers who are into viable businesses cannot take loans from us, but we do not focus on financing consumption. We finance production. So that's why if you look at the mix, our product mix, you notice that the loans to public sector workers is a small fraction of our portfolio. It is in it is because of what we were set up to do. For some other institutions, that is their focus, because that is a strategic position they have taken. And they may have some bigger issues to deal with when it comes to this. Let me link this to the discussion about risk management, that over-concentration can pose challenges for you. And so I encourage that as institutions, we should continue to look at our portfolio mix and say, how can we diversify so that where there are issues in one sector, it does not entirely touch the survival of the institution.
But are you still giving loans to these public sector workers?
Yes, we are. We are, but in a very, like I said, it's not a huge portion of our total portfolio. We have looked at which professions are at risk at this point, so that we do not expose ourselves so much into it. So as an ongoing process, risk management process, you need to be reviewing what are the sectors I should continue with. It does not mean that I should stop completely, because we are providing a critical service to the public sector workers, albeit in a smaller portion of our portfolio.
And with respect to your background checks, what goes into that before you give those loans, knowing what has happened in the past?
First of all, what is the professional area? You need to be clear what the profession is. Are teachers the one living the most, or there are doctors who are living the most? I've not mentioned who is living the most, but to say that in the first place, you need to check where the risk is. There are some professions that are very, I can say they are stable. They do not move out as much. And so that is where we go ahead also to take guarantees from their relations, or they should provide us guarantors. So that becomes a fallback position if that professional has
and are there collaterals too?
No, we use guarantees, just guarantees, and that's in response to what happened, I think about 3 years ago. We found that it was a huge situation for us.
Now, still on the NPLs, but then let's look at the macroeconomic environment. Somewhere last year we saw policy rate was reduced to somewhere 18%. We've seen inflation last November was 6.3%, interest rate and all of that. How is all of these macroeconomic indicators impacting the repayment of loans by your customers?
I can say that early days yet to give definite responses, but anytime the economy is stable, it provides better disposable incomes for borrowers, and they can pay. Okay, so yes, it is for me welcoming news. It's something we should encourage, and I think that the policy decisions, the ministers and the central bank should be applauded for what has happened. I would encourage, we pray that this is sustained, because if we have a predictable environment, even from a risk management perspective, you are able to project the cash flows of your customers if the economy is predictable. But where the inflation can jump up or currency can jump up, then the cash flows are difficult to estimate. The clients find it difficult to plan because they are unaware of what can happen. And I think that we've experienced some things in the past years where things were changing really quick, and that posed some risks to institutions. I think that let's applaud the owners, the drivers of the economy, and encourage them to sustain it, because the business environment would improve, benefits will go back to the business, the youth will have jobs to do, because these our big clients can expand, and once they expand, they'll need more hands.